right now, in fact, to Emeke Iweriebor. He's the regional CEO for UBA Africa. It's funny, Eli was talking about some of the ways that banks and mobile operators are working together, but it seems to me banks are going at a plodding pace compared to what's going on in the mobile world. How do you make sure you're not going to be left behind, if not go out of business?
Thanks so much, Todd. I want to thank the organizers for bringing us together in this forum to look at opportunities and ways in which we can leapfrog and transform, the continent. We share the same vision, we share the same ambition, and as a bank, our role is facilitative. We are the grease which engines need to roll and move. Coming back to what we are talking about here, what we see is that in our sector, the financial services sector, and even in other industries, we see a rapid disruption. Now, how else can one explain it when you see that the largest car transportation company does not own a car, or the largest hospitality company by way of Airbnb does not own a property? Now, so you ask yourself, what will this do to financial services in the medium to long term? Today we have about only 34% of Africans who live in sub-Saharan Africa with accounts. What that does for us is that an opportunity is emerging through which banks and other financial services, especially fintech, can create intermediation opportunities to be able to leapfrog the current state in which we operate. Now, to let you know how concerned how banks are about the emerging digital finance ecosystem, last year there was a survey done of global bank CEOs across the world, which showed that 81% of CEOs were very concerned about the impact and direction of digital finance on their business. Now, they now asked a very important question and asked, how many CEOs are interested in deploying some form of mobile banking technology? Without a doubt, all the CEOs responded by saying they were all interested. That tells you that banks are in a state in which, as much as they want to leverage on the opportunities that they see by increasing the ecosystem of participants in the financial space, they're also concerned because the risk exists that if it is not properly managed, banks can also be disintermediated. The traditional banking system, which all of us have lived with for several years, focused on the bank. The bank was the hub, and it had the distribution channels and branches related with regulators. It did business with vendors, but the bank was the center of focus and attraction. The current emerging ecosystem of digital finance focuses on the customer. The customer dictates when and how and where transactions will take place. So rather than having an 8 to 4 or 8 to 5 banking system, you have a banking system today that operates 24 hours. So I want to make a payment today, now, for utility services, maybe electricity, water. I sit at 11 p.m. and make the payment. This is much unlike 10 years ago, where if I wanted to make the same payment, I would go to the utility service company with cash. A cashier in there will count the amount, ensure it's correct, then stamp it and give me the receipt. After that, there is a period for reconciliation. That period can last 1 day. It can also last 1 month. So you can find out a situation where payments are made, but systems are not updated. So you lose service, electricity, water, or telecommunications. Right now, all parties are informed instantaneously because the vortex, the digital vortex, absorbs everybody all at once. The telcos, the payment services aggregators, the banks, and even the utility service provider. So we are seeing a lot happening in our space. And this also enables us to have a lot of information and data. This enables us to have a lot of data and information. We can track, and we have a track and trail of how people's spending patterns go. We're able to model our product and services in line with what we see. Now, in terms of success stories, there are quite a few, we have seen in our industry. And
15 seconds. That's
okay. Okay. Now, what we have done in our bank today is that we have moved at least 70% of our transactions now take place on our digital platforms. With what we call Connect Africa, somebody who has an account in Senegal goes to Côte d'Ivoire, runs his accounts, makes payments, makes withdrawals on the same account with the same checkbook he has. So in essence, we have seen an evolution of the banking industry with digital systems enabling our activities. Thank you.
Yeah, let me ask that same question, Emeke. Where do you see the next big revolution in Africa's financial services, and what will it take to make that happen?
Thanks. I just want to add that regulation, rather than being an impediment to the business of banking in our countries, has actually been a facilitator. Now, we have had a situation in East Africa where they have an East African payment system, which creates a settlement system between the three currencies in the countries that started the APS, Uganda, Kenya, and Tanzania. The critical thing about that initiative, for instance, was that it enables settlement using local currencies rather than an OECD currency. What I see in terms of the evolution is that we are going to have sectors that today, even within finance, where you have low penetration, like insurance products. Today, the level of penetration of insurance products is still very low in Africa. But with digital finance, access, differentiated products, you can possibly have an explosion in a short period of time. So that's what I see in terms of expansion. Same thing even in banking and financial services. We celebrate the successes. We hear about M-Pesa, for instance. What we don't hear about is that M-Pesa controls or is the source of more than 40% of the Kenyan economy. So beyond finance, you have agriculture, telecoms, industrial manufacturing that are routed through that mobile banking system. Same thing is going to happen in many other countries where you still have mobile banking as being nascent. In Southern Africa, the same thing. You have payment systems. You have Jim Yumwa in West Africa, Yumwa and GMAC. So what I see in the near future is a bridging of the disparity, the subscriber account gap. So today you have, in Côte d'Ivoire, 13 million telecom subscribers, but you have less than 4 million account holders. A time will come when you will use the platforms of telecoms and the mobile system to bridge that gap. Same thing in Nigeria, for instance, where you have 150 million telco users, subscribers, and less than 100 million accounts. So my perspective is that there's going to be a bridge over time between banking and telecom in the subscriber base and account numbers, and that will be very explosive for consumer banking, financial inclusion, and the economy as a whole.
And the key constraints that you see at this point are what?
Again, we've talked about regulation as being a facilitator. It can also be an impediment. So what we can do is to ask our regulators, the central banks, to always to be mobile partners, to work as fast as the economy's digital finance ecosystem is evolving. For instance, you want to apply, before you launch as a bank, before you launch certain products, digital finance products, you require approval from the central bank. What we would like for the central banks to do in our different economies is to reduce the time for review. So rather than taking 9 months to 1 year to review, 1, 2, 3 months. This will help things. This will facilitate financial inclusion. This will enable even the banks create new products that will reach out, to the larger economy and the larger society.
And finally, because we're moving so quickly, you don't need to go to a bank anymore, clearly, and most Africans don't. What do you see the role of the bank 5 to 10 years from now? Objectively speaking.
That's a throwback. My assessment is that banks will be there. Banks will still be functional in the financial system, but our role will definitely evolve. Like I gave the examples that have taken place in the last couple of years and decades. What banks will do is to, rather than see the digital financial system as a competitor, fintechs as competitors, we must see them as collaborators. We must leverage on their resources, their capacity, and their speed to transform our products. I just want to give an example. Some financial institutions are, as you may say, concerned. But what is not realized is that the greater the level of digitalization, the greater the level of exposure, you're actually bringing a lot more people into the banking system. And so what that does is that you have more products, you have more companies that are able to bank. With the deposits you're able to raise, you're able to lend more, and ultimately you get increased revenues. So rather than seeing the emerging trend as a threat, I think it's an opportunity for all of us to leverage on what technology provides right now and build, the financial system even further.